Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, November 20th, 2016. Hope you guys are having a fantastic weekend and let's get started. So we saw a little bit of weakness on Friday. Nothing major. It's gonna be a little tricky because I have a feeling that we're gonna see volume really lighten up next week because we have Thanksgiving on Thursday. Friday is a really not a lot of people are in the office trading. So it's a little tricky. I think if they're going to give us any type of pullback or a quick one, it may be something that ends on Wednesday, and it's just a quick drop. Now we're pretty overbought with our SMI on the daily chart. It's still a bearish wedge. It would make more sense if we came down here at some point, but it's just a matter of what is going to be the roadmap to get down there. So this wedge right here is warning to be very complacent on the long side, but it's not is something that is you have to short right now because we have the bearish divergences from before, but we don't have anyone that form now. So we may just kind of hang around, chop around up here somewhere in that range, form some type of bearish divergence, and then from there maybe start a much larger drop than I'm kind of anticipating right now. So again, bearish rising wedge right here. Target is this area. It's just a matter, are we going to head up before down, or are we going to chop around? But this is the target, but it's not something that I believe is going to play out within, probably it won't even start until sometime in 2017, but we'll have to wait and see. So taking a look at the 60-minute chart, this is giving us warning signs for the short term, and why I've been layering. I layered in a half of a short position. I didn't add on Friday because I didn't really want to lock myself in heading into the weekend because we know that if they're going to get over resistance, they're going to gap over it. So I figured I would just hold my half a position, and if they do, try some kind of gap up on Monday, maybe I'll fill it from there. But you can see we have the bearish divergences here. So this is saying that we should be expecting some type of pullback. You can see we have a moving average as well as a 50% retracement at 2136. Makes sense. This may be where we come down. We could go down a little bit further, but the first support area is really going to be right around this 2164. Once it breaks that, there should be a reaction trade down to the 54, and then down to the target areas that I'm looking for, 2148, 2136. So we have the bearish divergences, very overbought right here. So this type of move would make sense because I'm not sure they're going to be able to push it through this resistance with really after seeing sell signals like they are in this size of the move, it would, like I said, I think it's better odds that we come down and pull back a little bit before possibly heading higher. 15-minute chart, again, we have a series of bearish divergences. Just a regular, this is a wolf wave that was in place here. So this is looking for a short-term target at 2163. Like I said, I still think they can come down and start closing gaps right here, or doing a larger retracement after this type of move. And it may, like I said, it may be something that that happens fairly quick, and it's all it's said and done by Wednesday. We'll have to kind of wait and see on it. But I wouldn't really be complacent with this market, but stay open-minded just because we have a shortened week. I think volume is going to be pretty, non-existent, and typically when we have that, we see the bulls drift things higher. So, I'd be a little careful jumping on the short side, but even though it would make more sense for a quick move to the downside before heading higher. So that's really about all I have for this weekend. So enjoy the rest of your weekend, and I will talk to you guys in the morning.